Hey everyone, today I'm going to talk about Dollarama stock and whether it's a good investment right now. So Dollarama just recently reported its Q1 results for fiscal 2025 and the results were pretty decent. So comparable store sales 5.6% was really strong. And if you're ever looking at retail stocks or restaurant stocks, the key number really to look at in terms of growth is the comparable store numbers, because that's the growth rate when you're comparing the same stores that were open a year ago. Some stores may have a really good growth rate, but that's because of new store openings. Comparable store sales factor that out and just look at the same stores that were open a year ago. So 5.6% comparable store growth is really good. Comparable store sales growth is really good. And also had a 22% increase in EPS, earnings per share. So really strong numbers. As you can see, their actual sales numbers were up 8.6%. Again, that's getting a boost from those new store openings. So really solid numbers from Dollarama. And one thing that's really interesting is that they're planning to expand into Latin America, specifically Mexico. So it increased their equity interest in their partnership in Mexico. And that's going to be a huge opportunity for them. So their long-term store target for Dollar City from 850 stores by 2029 up to over 1,000 by 2031. So a really interesting opportunity for Dollarama as it still focuses on growth. And so it's taken an additional 10% interest in Dollar City, so a Latin American retailer. So it's one opportunity to get into another big market for the retailer. Obviously, it's doing well in Canada, and a lot of Canadians go vacationing in New Mexico. So it's a really intriguing growth opportunity for a company that's already been generating some solid results. Now let's take a closer look at its fundamentals. So here I've got a breakdown of Dollarama's recent earnings numbers, and you can see it's fairly steady, been increasing. We can see the growth rate this past quarter was 9%. Before then, we're at 11%, 15%, 20, 21%, right? So they've been doing really well in terms of being a good growth stock and always growing both in the top line and on the bottom line. You can see their bottom line has been increasing a lot as well. Profit margins really solid, over 15% consistently. So really good numbers from Dollarama. There is some seasonality. You'll notice in Q4 it generally has more revenue. So on a quarter-over-quarter basis, technically sales fell, but obviously that seasonal effect is going to have a bit of an impact. As far as where the stock is right now, it's at about 123 as I'm doing this video. The consensus price target, this is based on analyst estimates, 125.8. So not a huge amount of upside there, but the thing to keep in mind about analyst estimates, they're only looking at the next 12 months and they routinely get upgraded. So there might be some upgrades coming after these latest numbers that'll boost that up. So if you're basing it off the price target, in the near term, there might not be a whole lot of upside, but if you're a longer term investor, then it still may be an intriguing option, especially with the plans in Mexico. So in terms of valuation, it's trading at 33 times earnings, which is a bit high. But that being said, for a stock that's, routinely growing its earnings by, well over 15, 20% at times, over time, if you look at it in the long term, if that path continues, then eventually that earnings number is going to continue increasing and that multiple is going to come down. On a price to sales multiple, about 5.8. Again, a little bit high, not too high, but still definitely paying a premium for the stock when you consider its price to sales multiple and its earnings multiple. It's near the high of its 52-week range, so at 123, its 52-week high is about 129, so it's getting really close to that. In terms of relative strength, at about 51, so right in the middle, not terribly oversold or overbought, so right in the middle of the pack, even though it's near its 52-week high. In terms of its moving averages, it's right around its 20-day moving average, so it's not above that, but it's well above its 50-day and its 200-day moving average, so really good indicators on the technical side in terms of its valuation. So it's been steadily increasing over the past year, doing really well. Over the past month, its returns have been flat, but 3 months up 16%, year-to-date 30%, 1 year 42%. So overall, Dollarama has been a really good stock to own over the past year. And given how well it's been able to do, I think this is still a good stock to buy and hold. 33 times earnings is a bit high, but the company's going into Mexico, and I think it's going to be a great opportunity for it to reach more Canadians who are vacationing there. And it's a really underrated opportunity, I think, to grow its business even more. The company's been doing achieving some really good numbers, as you can see, in terms of its growth rate, in terms of its profit margins. So overall, nothing really bad about Dollarama's stock, even though their prices are a bit higher than they've been in the past. This is this is a store that competes against Walmart these days in terms of pricing, just because they've got similar price points on a lot of products, especially on obviously the lower end products, but especially for people who are looking to save money. Dollarama is still a pretty attractive option, and by having higher price points, it's more competitive, offers a greater variety. So I think it's a really good stock to buy and hold. Even though its valuation might seem a bit expensive, I think by going into Mexico, it can accelerate its growth rate, and it'll be a really good opportunity, I think, for the stock and for the business to get even more valuable and bigger. So I think Dollarama is a really good stock to buy and hold, even though it may seem a bit expensive. I think in the long run, it can still generate some great returns.